Wall Street controls 100 trillion in assets, but they have a massive blind spot. Now, I'm going to expose that, but like I said, I have an announcement because I'm actively fixing it. Now, while the majority of people have their paychecks going into pension funds, they're going into 401ks, they're going into mutual funds, all that's done passively. What they don't realize is that up to about 40% of their money is actually stuck in fixed income markets. Now, these fixed income markets are stuck behind behind restrictive mandates. Now, unfortunately, these funds are also losing money. They're not making money, they're losing it. But here's what nobody's really talking about. There's a new category of companies that's building regulatory workarounds to unlock these trapped trillions of dollars and usher them into the best performing asset in the world. Now, if you see what's happening, if you see what's really happening and you understand it, then you can take advantage of this what Michael Saylor called a once in a 1,000-year opportunity. But of course, if you miss it, then you watch the largest value rotation in history happen, but without you. Now, I've been building tech companies my whole career for decades. I have 2 big exits. I've been deploying capital in a Bitcoin venture fund for over 5 years. And I've just made the biggest move of my life, and it puts me at the center of what this entire transformation is. All right? So if we frame this up a little bit, the shocking reality is, like I said, most people's paychecks are passively going into these. And modern sort of portfolio theory is basically 60% stocks, 40% bonds. And that bond money, if you're in pension funds, if you're in these things, insurance funds, they have what they consider their mandates, their safe asset mandates to go into these fixed income markets, these bond markets. And so for most of you that are investing passively, you have at least a big chunk, 40% chunk of your money is in that. And so these pension funds have these mandates, the insurance premiums, they have, they're in treasury bonds or whatever. But again, the crazy part is about 40% of this institutional money is legally trapped in assets yielding about 2 to 4%. Now, inflation, CPI, the government tells us it's about 2 to 3%. So if you're making 3 to 4%, you're not doing too bad, right? Well, if you watch my channel regularly, that the real rate of inflation is not the government's CPI, or as I like to say, CP lie. The real rate of inflation, of prices going up, is the rate of monetary debasement. That's the rate of the monetary expansion. And if we map that out for about the last 20 years, it's about 10% a year. That's how much you're actually losing, 10% a year. So 3, 4, 5%, that ain't gonna cut it. But the problem is, like I said, is all of that money is stuck in there. We have about $300 trillion globally in these bond markets, in these fixed income markets. And again, they're like handcuffed in there. Like I said, pension funds, they have these restrictions. They literally cannot buy anything other than their mandates. But again, their mandates have them losing money. Insurance companies, again, they have really restrictive mandates. They can only invest into like things with strict capital requirements. So for example, CalPERS. CalPERS manages $469 billion, but it can't touch anything around like Bitcoin, for example. So we have like the best performing asset. We have BlackRock, the largest asset manager in the world, that's now saying, hey, you should take a 5% allocation, but none of this money can. The institutions are forced into these fixed income bond market. Again, $300 trillion. And so what are they actually buying? If you've seen the movie The Big Short, remember that movie? It kind of documented the housing crisis in 2008. And they showed how basically these companies were buying these CDOs. They're collateralized debt obligations. It's like a sausage. You get all this debt, all these different houses or whatever, and you put it all together. But the problem with that is, as an investor, I don't know what's in there. I don't know how to measure my risk in there. And they're under collateralized. There's not even enough collateral to back the amount of debt. And then even worse, besides all the risk, besides me not knowing what it is, I'm making 3 to 5%. Which is not even keeping up with the rate of debasement. The inflation's crushing me. So I'm taking the risk and I'm getting crushed. And again, there's trillions of dollars stuck in these pools that are behind all these mandates. But right now, what we're seeing, and this is why this is such a big opportunity, there's a legal workaround. And it's already working. It's already happening right now. Now, I've been working now in the Bitcoin space for about 10 years. like I said at the intro, for about 5 years now, I've been deploying venture capital into the Bitcoin companies. Recently, if you've been watching my channel, you've been seeing something new's been happening. I've been talking about Michael Saylor. I've been talking about MicroStrategy, which is now Strategy. I've been talking about the new Bitcoin treasury companies. And that's this big opportunity that we've been seeing. Now, I've been observing this. I've been doing videos on these Bitcoin treasury companies, and they're basically emerging to solve this. A lot of people don't really understand this. A lot of people that I've seen on X, they're saying that this is like a grift. It's a way to scam people. No, what it is, it's a way to create an option for people stuck in these mandates that can't buy Bitcoin directly to get some sort of exposure to that. Now, that's why these companies are growing up so fast. I'll break that down a little bit more, but I just want to say that because I've been observing this, my fund has been investing into these at the early stages, and I can see we're at an inflection point. Now, the companies that are able to build the best, what I'm calling liquidity straws, they are going to capture trillions of dollars. But the problem is most of them are missing their key pieces. And us as investors, we have to understand this because there's 3 different types of companies that are doing this right now. It's important that we understand, that you understand the difference. So number 1, you have like Tesla. Tesla's obviously a car company, one of the best performing stocks out there. And they are buying Bitcoin for their treasury, right? Tesla has money, it's in savings, in their treasury, they're buying Bitcoin. That's number 1. Every company is going to need to buy Bitcoin on the balance sheet to survive. Number 2, we have these companies that are Bitcoin treasury strategies. So what that means is they're not just putting Bitcoin on the balance sheet. They're actively running a strategy to leverage the public debt and public equity markets to lever up, to build up their Bitcoin as fast as they can. But they also have an existing business with them. A good example of this is Semler Scientific. They're running a Bitcoin strategy. They have a lot of Bitcoin, but it's also a medical company. That's number 2. The third type of company that's emerged is what I've been calling a pure play. If you watch my channel on a regular basis, I recently did a video on this. And this is a company that's basically created a financial product. It's a company that is creating a financial product into the space, and the strategy is the best example of this. So their ticker, MSTR, is its own financial product now today. It moves more volatile than Bitcoin. So if Bitcoin goes up a little bit, it goes up more. If Bitcoin goes down, it goes down even more. That's what the market wants. And then they've created additional products. They've created Strike, Strive, and each one of those products is designed to specifically fit within one of these liquidity pools to fit within their mandates. And so now this stuck pool of capital now has a better option. So instead of buying this opaque basket of collateralized debt that I don't even know what it is and I'm earning 3 to 5%, now I could buy one of these MicroStrategy assets that pays 10%, pays double, and it's over collateralized, 3 to 1, 4 to 1, 6 to 1, and instead of this opaque basket, it's one pristine asset that I can see. Now, of course, if you're a fund manager and you have this risky asset at 3% or this risk, I don't want to say risk-free, but much less risk asset that I can make 10%, of course, I'm going to want to do that. And it fits within my mandate. I can do that. And that's exactly what strategy is doing. Now, the big opportunity is that each country has its own market, and each country has its own pools of liquidity, and each one of these pools of liquidity have their own set of mandates. And so the second company to follow Strategy's lead was Metaplanet. Metaplanet's in Japan. It's another market that's cut off, from the United States. They have their own problems getting access to Bitcoin, and so they have all their own regulations and mandates. And so Metaplanet is doing a very similar thing, but in that market. Since they started doing this about 14 months ago, their stock is up 7,000%. Now, David Bailey from Bitcoin Inc., he started a company called Nakamoto, and their goal is to set one of these up in every jurisdiction because each market is different with, again, its own set of pools with its own mandates. And that takes me to the biggest announcement that I have, maybe the biggest move of my entire life. I have decided to join one of these companies. I've been critical of them from the sidelines. I've been saying why I think Model 1 and Model 2 is the wrong. I think Model 3 is the best one. I'm commentating. I'm an armchair quarterback. But that's not me. I'm a founder. I'm a builder. I've built multiple companies. I advise companies. I invest in companies. And so I decided to put my money where my mouth was, and I joined a company called Satsuma. They're a UK-based company listed on the LSE. The ticker is SATS, S-A-T-S. Now, I've joined as the chief Bitcoin strategist. And so my job there is to basically deploy what I believe is the very best business model, the very best winning business model. All right. So no more armchair quarterback for me. I'm going to put my money where my mouth is, and this is going to be the biggest move of my career. Now, again, this isn't about just Bitcoin adoption anymore. We're literally building the infrastructure for the largest capital rotation that we've seen in history. Because every pension fund, every insurance company, every corporate treasury, they're all stuck in these regulatory moats, stuck losing money, and now these companies are popping up all over. Matador in Canada, we have Orange popping up in Brazil, we have HODL systems in India, and each one in these markets to provide these regulatory arbitrage opportunities. It's financial engineering, right? Again, back to strategy. Their strike, STRK, their success story, is that they're issuing these bonds at 8% yield backed by Bitcoin collateral. And institutions can buy these things now, which is why they're raising billions and billions of dollars. And so if we look at it from a business perspective, we have $100 trillion, the total addressable market, the TAM, just in these assets alone. And that is the opportunity. And so when a lot of people think like, oh, there's going to be, this is a bubble, these companies are getting hyped, they're going to crash, they don't really understand what's going on. These companies are building the infrastructure for this capital rotation. And again, every pension, every insurance company, every corporate treasury, a good chunk of that $300 trillion is going to want to come over. So here's what this means for you. For me, I've made the biggest bet of my career. Not only has my fund, Bitcoin Opportunity Fund, been investing into these, personally I've been investing into them, and now I'm putting my money where my mouth is and joining Satsuma, ticker SATS. But what it means for you is that you should be watching these public companies doing the pure plays. That's my favorite way to play it. So MSTR, right, in the United States, MicroStrategy or Now Strategy. MetaPlanet, MTPLF in Japan. Matador, MATA in Canada. Like I said, Orange in Brazil, and now, yes, SATS, Satsuma in the UK. Now, if you understand this, again, start watching these, start paying attention. It's much bigger than what you think. And hopefully if this video opened your eyes, hit the subscribe button so you can keep up to date on what's going on, because this space is moving really fast. Join my newsletter for updates, and comment below. What questions do you have about Bitcoin treasury companies?